So today we will talk about the actually taxes which is trying to impose on the Provident Fund contribution. So popularly known as the PF. So this is very important. So we will talk about the tax on PF contribution. So why in news? So firstly, as you know, the government will amend the income tax 1962 and imposes a tax on PF. PF means Provident Fund. So here is the Provident Fund over 2.5 lakh. Those who are actually contributing the 2.5 lakh, above that, not up to the 2.5 lakh but above the 2.5 lakh. So those who are contributing on the PF 2.5 lakh, the tax will be employed, and that would be for the private employer. So remember that. And for the government employer, that amount would be the 5 lakh. But remember that here is the condition. What is the condition? In case actually there, as you know, there is the employer and employees. So what happened in that? Actually, the whatever is your amount, whatever is your salary, let's say 20,000 is your salary. So out of that, the 12% means almost here is the around the 2,400. Out of that is the PF. So this 12% will be deducted from your salary, as well as the 12% actually remitted means given by your employer. So what happened that this is actually, so those who are actually contributing the 2.5 lakh for the private employer. But what happened in the 5 lakh, there is an exemption given, but with one condition. What that? Here is the only contribution will be done by the employee, means whoever is the PF account holder. Government will not provide the PF. Government will provide the PF up to 2.5 lakh, but after the 2.5 lakh, this exemption has been given, but that contribution which only by the employee, means those who are getting the salary. So this is very important, and that's why this exemption. But in the private employees, actually whoever is the amount, irrespective of the thing, 2.5 lakh, above 2.5 lakh, there will be tax will be imposed, and that tax will be imposed as an interest. So this is very important. So before understanding the concept or the rationale behind this step, means the reason behind this step, we need to remember the aim of the Provident Fund. So remember that 2 to 3 things you need to remember. Those who have a salary of 50,000, there will be a mandatory PF. Means irrespective of the thing, you have to open an account as a PF and will be provided with a unique account number, popularly known as UAN. So unique account number will be provided. But those who have this salary above the 15,000, they will be voluntary. So either they can open or they cannot open. So what happened that those who have the 15,000 salary, so this is basically for the worker, and especially those workers who have the less salary. So at the time of retirement, means at the age of 50 or at the age of 60, whoever is the retirement, so rest of the life they can spend with this PF amount. So this is very important. So with this PF amount, this is the basically the aim of this Provident Fund. So but what happening in this is completely the tax free. Firstly is the thing is the completely tax free. No tax will be imposed by the government before this amendment. And another is the 8 to 9%, popular 8 to 8.5% actually interest given by the government or either by the private company. So whatever is the company, 8%. So 8% interest will be given. So what happened, whatever is the contribution, let's say up to 1,000. So 1,000 will be by the employees, and then 1,000 by the employees, and that the 8% interest. So this is done. So what happened that, so after that what happened that if you talk about this interest, so this is the 8 to 8.5% interest. This is very important, which is actually not provided in the savings account as well as the fixed deposit if you talk about. So this is not provided. So what happened, there are the employees actually who are earning the up to 1 lakh, 2 lakh salary, 3 lakh salary, or whatever is the net worth individual up to crores. So what happened in this, that they are contributing in that, this is the Provident Fund. So they are contributing the heavy amount, or they are actually, you can say the same in this account. So what happened if someone is actually 1 lakh per month. Let's say 1 lakh. So you know, in that 1 lakh, the 8% will be interest, and that would be the 8,000. So this is, you know, actually in that what happened, a large amount they are getting as an interest, and on that interest there will be no tax. So they are getting the heavily benefited, especially for the high net worth individual. That's basically, you can understand that those who have the salary of 1 lakh, 2 lakh, or you can say. So out of that salary, if you are even living in the Gurugram, let's say Mumbai or anything, that amount would be the 50,000 is enough for spending a life with a family. So what happened, that 20,000, 30,000, 40,000, 50,000, 1 lakh, actually they contribute to the PF, and interest will be provided by the government, and that would be tax free. So in order to curtail that thing, actually government amended this income tax and said that after the above the 2.5 lakh PF contribution, there will be a tax. So as you know, highest PF contribution for taking benefits of tax assumption, and at the same time actually earning the income through interest. So this is main reason for this step is basically to curtail the misuse of PF contribution actually done by the high net worth individual. So this is the main important. So what will be the thing in this PF contribution actually changed by the government, we will discuss. As I have told you, the reason for this step and taxing on the PF contribution, basically to curtail the scheme or misuse of this scheme actually basically for by the high net worth individual or whoever the income. If suppose someone's income is 70,000, then obviously 50,000 will be for the basic salary which will spend for the daily life or let's say monthly life, and 20,000. So remember that although this contribution is actually exempted by the government. So remember that. And amendment in IT Act, which is known as the Income Tax Act 1962 through 25th Amendment, and in which what happened, actually the rule 9D was added by the government, which is related to the taxes on PF. So what happened, this tax, as you know, above 2.5 lakh for private and above 5 lakh for this government, with one condition. As I have told you this condition, because in this what happened, that contribution or whatever is the PF is only done by the employees and not provided by the government. So whenever this amount will exceed, there will be tax imposed. And what happened that, and this account, so remember that now there is only one account. So what happened, now the account will be divided into the taxable account and the non-taxable account. Suppose someone's actually contribute to the 3,50,000 in the PF account, and what happened, the 2.5 lakh rupees will be in the non-taxable account, and that 1 lakh will be transferred into the taxable amount, and on that 1 lakh plus whatever is the interest which will be imposed by the government, collective amount will be considered as the tax. So this tax will be given to the government, or have to pay the government, or government will deduct by itself. So this is very important. This will also increase the revenue of the government. And what is the main motive? Main motive is to curtail the misuse of this scheme, and basically it will not affect the normal workers, because still the amount, if you look, you can still on the PF contribution you can at least the 21,000 you can now still you can contribute, which is a huge amount, and that will be tax free and interest will be given. So this is although big amount, so this will not affect especially those who are actually getting the salary up to 50,000, 60,000. So this is all about the taxes on PF contribution. Thank you guys. Hope you like this video. You should subscribe my channel. Thank you so much for watching this video.